Welcome traders back to another video at the Modern Day Trader with your boy Marcelino. And today I'm actually quite excited for this video. It's been a minute since I've been backtesting, and I've been backtesting this particular strategy. Now I'm not by any means going to commit to this strategy at this current point. All we're doing is data collecting, building a business model that could potentially work. I'm not tied to any results at this given point, but what I can say is that in the testing phase, you just want to test and build on the results that you get. Now, I know I mentioned that I am looking into smart money, and I'm still looking into smart money. One of the biggest players that I am looking at is Kyle. I think his YouTube channel is TradeCap, but ultimately just trying to build in this pivoting phase and take a look at everything that could potentially work. And obviously with my research into futures, I wanted to potentially find something in the future space, so trading NQ or ES or whatever the case may be. Just because of the opportunity cost, and me being an accountant, I had to take a look into the cost of trading forex, and it is quite hefty in comparison to futures, right? But anyway, let me get into the strategy before I actually show you guys the numbers that I've got from the month of April and up until this point, right? And I'll walk you through the trade that was available on Friday past, right? So the strategy, it's pretty simple, right? So what you're looking for in the strategy is on NQ, Nasdaq 100. The first thing you're going to do is, what I've done was I marked out. So you mark out the first 15-minute range at the open, right? So when the market opens, you're going to wait. So in South African Standard Time, the market opens at 15:30 at the current moment. So 3:30 in the afternoon, and you basically wait for the first 15 minutes to play out. You mark the high and the low, and then you simply wait, right? That's your levels, your key levels that you're going to be trading out of. Then the second one, after you've marked out your high and low of the 15-minute or of the first 15 minutes, I usually do it on the 5-minute. Let me actually note that down. The time frame that I have backtested so far, or where I'm plotting my levels and where I'm trading out of, time frame to mark key levels and execute trade on is 5M, right? That's why we're on the 5-minute chart. So that's the second thing that you need to know. So when we get to 9:30 Chicago, on the Chicago Mercantile Exchange, I think it's Eastern time, you are going to basically be on the 5-minute, number one. Then number two, you're going to mark out your first 15 minutes after the open. So that's 3 candles. Mark the high and mark the low of that particular opening range, and then thereafter all you're going to be doing is wait for a breakout. Wait for a breakout, and essentially you're going to be waiting for a strong candle close outside of the range or of your key levels, right? That's all you're going to be doing. Once you get that, you execute short or you execute long, and your stop loss will go above or below the range, right? So if you're taking a short, it will go above the range that was created at the open. If you're taking a long, it will go below the range that was open, right? And these were essentially, and then let me mention this, number 5, you will be targeting it will all let me say TP at 1 to 2. Oh, what happened? Where did my typing go to? Where did my typing go to? Okay. Anyway, it will be TP at 1 to 2. I don't know where the typing went to, guys. TP at 1 to 2. And then your stop loss. Oh, I'm on ES. That's why. Shit. Here we go. So we can continue the typing. So TP at 1 to 2. And then SL to break even at 1 standard deviation of the opening range, right? And it's quite simple to find. So the way you find standard deviations is when you use your fib tool, you make a -1, -2, -3. You don't necessarily need the -2 and -3, but essentially what you're going to be using is your -1 level, which basically says that that is 1 standard deviation of your opening range. When you place in your fib, you're placing it, if you're taking a short, like in this case, you're placing it from the high of your range to the low of your range. So essentially on your key levels that you plotted at the start, and then when it gets to your first standard deviation, that's where you go and break even, right? And that's what you can see on this trade right here. Now, this trade is not yet recorded in the journal, and I'll take you to the journal very soon. So what we had here is, if I just remove everything. So what we had here was, you can see that the open is basically shown by when we are out of this blue area. And I don't know, NQ just pulls it up like this. So the open is here. Then you can see that, so the first 3 candles is what you're going to basically be looking for your high and your low of the range. So you can see that the high of the range was created at 2279.75, and then the low of the range was created at, what is this, 20,221.50, right? So then all you do is you let price play out, add your alerts, and once your alert goes off, you make sure that at that 5-minute close, did we close or did we close back in the range? Did we close outside the range? Did we close back in the range? So as you can see, on this given trade, we closed outside the range at about 4:15 South African Standard Time. You place your stop loss above the range and you just let it run. Now you can see that we had a clear impulsive push to the downside. Unfortunately, we just about missed the stop loss and we just let it run. Like, I'll let it run until it hits either break even or until it hits take profit. And this is where I would have gone break even. As I mentioned, I'm just back testing and checking what happens. This is part of my forward testing because I do want to get used to looking at the charts and seeing the movement, getting used to how long. So the things that I still need to add to my back testing is, or my back testing sample that I'm folding even with forward testing, is what is the duration that I'm in the trade, what's the duration of losses, what's the duration of wins, etc., and what is the duration of break even. So if you get those things, then you can more likely than not see if it hits take profit in, let's say, the first 2 hours, generally on my winners, then you can kind of start to anticipate that normally, but I need a bigger sample size for that. Normally over, let's say, 100 trades, we hit take profit in 2 to 3 hours. So after that 2 to 3 hours, is it worth it staying in the trade? Or normally after, if we take a loss, it will just go against us immediately and you just know you're going to lose. Now with this trading strategy, you take 1 trade a day and that's that. If you catch a L, you catch a L, you walk away, and it is what it is. If you catch a W, you catch a W, and you walk away. So it is what it is. Yeah, let me show you guys so right now we do not have the last trade, which is still open. We don't have that recorded at the moment just because it's not done at the current moment, right? So what you can see is that over 21 trades taken from April into May, we have a 61.9%, which is basically a 62 if you round up, 62% win and break even rate, and then you would have come out with a total of 4R. Now generally the way I look at building a sample size, every 20 trades I'll have a new rendition of my trading plan. So after this, what I did was I started to look at the trading plan, started to add tags to basically filter out what I could make better in this trading plan. And what I found was, okay, so we followed that trading plan that I mentioned here, right? This was trading plan or strategy number 1, right? There was no taking into account news. There's no taking into account anything other than just these rules. So you're taking a trade every day, regardless of what's on Forex Factory, regardless of what's happening in the world, regardless of any macroeconomics, right? We just took this into account. I added this standard deviation after about, I think, 10 trades, and I applied them to all 10 just because I wanted a break even. I'm of the opinion that I'd rather secure my money and secure capital and protect my capital than to be exposed to losing a 1% when price action has actually moved in my direction, right? So that was the first rendition of the trading plan. Now you can see that we had quite a bit of losses. So we went on a really good win streak at the start of the month, and that's also something that I need to look into, because generally up until, I think this is the 24th, I think generally from the start of the month, like from the second week of the month till mid-month, we have a really good performance, and then it seems like was apparent that to the back end of the month and the very first week of that month is not the greatest of performances, but we need a bigger sample size to actually make that decision, right? So we don't have any conclusion on that hypothesis at the current moment. Now, when we actually go into what I could have changed, so I started looking at number 1. Can I take, if I was to take a partial at the second standard deviation, would it make a change to this RR that I got over 21 trades? So no, it would have made it less. I would have ended up taking a break even and over this 20 sample trade, and I would have been perfectly fine with a break-even strategy at the initial testing phase, just because if you think about it, like having a break-even strategy at testing phase means that there's something to work on, right? So when I came out with the 4R, I was like, oh, there's really something to work on here. So when I tested the taking a percentage off at either 1 or 2 standard deviations, it didn't make sense in terms of return and R multiple, right? So we scratched that idea. Idea number 2 was, let me see what happens when we trade with no news, and let me see what happens when there was news, right? So I started to go through Forex Factory, just noting. So this is the important thing. So initially I noted whether there was news in the New York session and into the Chicago Mercantile session, right? And I was just like, it doesn't make sense, because more likely than not, like that news that's coming out at 2:30 would have been priced into the market at 3:30 already. So it doesn't really make sense to take that into account. So then my mind shifted and changed, and I thought, okay, let's take into account the news after 3:30. Any red folder news on Forex Factory, let's take into account news after 3:30. Then I started to create this tag of news in candle and no news, basically, right? So I wanted to see what the performance over this 21 trades was when there was news in the candle, meaning news after the open, and when there was no news after the open. So let's actually see. So if I filter out my tags and I go to news in candle, what do we get? -3R, 9 trades. So 9 out of the 21 trades that we took, we had a whopping win and break even rate of 44%. Pure ass, which is not that great on a 1 to 2. You want to know where you need to fall. I think you need to fall around 45, or I think 40% should work, but this is not at all great. We had 1 winner when we had news, and we had 1, 2, 3 break evens, and then the rest are all, so 1, 2, 3, 4, 5 losses when you have news in or after the open, after the Chicago Mercantile Open, which is sad. But for me, this is great news, because if you think about it, feedback Failure is feedback, and feedback is knowledge, and knowledge is power. So getting this information back from the market is wonderful, because now I know the chances of me now taking out these losses and break evens are high. Like, I literally only won. So one of our winners came with news in, which is, I'm fine with not taking that one win. If I remove all of these losses and this break evens, I'm perfectly fine. Now I'll take less trades 100%, but I'll win more. So let's go to how we performed with no news if we were to take only the trades on the days where there's no red folder news after the Chicago Mercantile Open. Now bear in mind, this doesn't mean that there won't be news in New York Open. There was definitely news on these days in the New York Open, but I discounted those and I only looked at the news after the Chicago Mercantile Open. Click on this and boom, a whopping 75% win and break even rate with a 7R. And even moving forward testing this, so now I'm only going to be testing these parameters. So on top of this strategy here, what I'm going to add now as number 7 is trade, or let me say only trade on days where there is no news after CME Open, right? Let me actually say red folder news so that it can be more clear. Red folder news after CME Open. That's the next thing that we're going to do. And why is that? Because when you go through the information that we got back from testing, you can see that we've won quite a bit. We would have gone on basically a 3-trade with no loss streak, and then we lose, and then we go on 3-trade no loss streak, and then we lose, and then we go on 2 break evens, and then we lose. But at the end of the day, if you look at this equity curve, it looks perfect. 12 trades over a month and a bit, and you got a total return of 7R. That is fucking amazing. You're beating majority of trading strategies at this point over a month and a week, month and like a week and a half or something like that, because this thing started on the 7th of April and we went up until what was Friday's date, the 9th, up until the, okay, I would even say the 8th. So that's only a month, literally only a month and a day of trading. And over a month and a day, you would have taken 12 trades with, if you just take it into account, no news, you would have had a 70% win and break even rate. And that would have given you a total ROI of 7R, which is amazing. Now, as we move on with this trading plan, I will probably add more filters and start to look at where my losses are. Is it on a particular day of the week? As I mentioned, just need to go over this sample size and start to add more data, such as the duration of the trade, durations of wins, durations of losses, durations of break evens. That type of information gives you that feedback on what you should do in a strategy. And I think the problem with traders today is that we become so attached to our strategies or attached to one particular way to do something. Now, I understand that when you have a profitable strategy and you're working on it and you're trading profitably, it works for you, that's perfect. But there needs to be constant refinements of your trading plan, and you can never be so attached to a specific model that you essentially don't want to change. Because that when you don't change and you don't start to look for feedback on your results, you become stagnant. And as they always say, stagnant water stinks, or still standing water stinks. You'll become a stinking trader. And I think it's always just about the saying that I love so much, that you like, failure is feedback. And this is not even failure. You always need to take into account that you need to take the next trade, and you need to take the next trade, and you need to take the next trade. And when you're testing, or even when you're trading a plan, the important thing is risk management so that you can stay in the game. But once you get that information back, and if you can trade as You can't trade unemotionally, or when you can't trade without emotions, right? Like, that's impossible. You're human. But like, if you can execute as mechanically as possible on your trading plan and get back that results within the live markets, get back that results and reflect on it and start to do these filters and start to add these research mechanisms, and not be afraid to criticize yourself and your trades, criticize the failures and the results, and whether it's win, loss, or break even, you can get critical information from that. And remember that the information that you get and the feedback that you get on a day-to-day basis from yourself is where you will become a better trader. Like, if it's routine, if it's laziness, if it's lethargic, why are you feeling that way? Is it because you're not getting enough sleep? Is it because you're not eating right? But whatever you're doing on a day-to-day basis, if it's recorded, you can get that feedback. And that's the important thing about like having a journal, having a trading journal, so that you can get the feedback on yourself and understand the information that you are putting out on a day-to-day basis. Now, what you also need to know is that 99% or 90% of people are probably going to think the same information and think the same thoughts tomorrow that they would have thought yesterday. And you need to break that loop, and you need to start to, as I mentioned last week, think about the why. So when you're going through a slump in trading, the biggest thing that you need to lean on is the information that you have back from the markets. It's very important to record every single trade, because that provides information on yourself and how you are doing in the markets, and your strategy as well, and how disciplined you are with the strategy and your application of that strategy. Because sometimes when you go wrong with the strategy, it's not just you going wrong. It might just be that the strategy it's a bit too rigid, or it's a bit too open-ended, and you need a more rigid system, and you need a more mechanical system. So it all depends on you. But like, my cry and my call today is, go back to your why. Why did you start trading? Why did you start this journey? Just go back to that and remember that nobody can stop you but you. And be honest with yourself, be open with yourself. Are you putting the work in? Are you doing what you need to do to get to where you need to get to? And so I want to end this with the saying that failure is feedback. Feedback is knowledge, and knowledge is power. The biggest thing that could have happened to me in my trading journey is that I failed at 100K account, because that has given me feedback on myself as a trader and what I am capable of and where I need to work on myself. So don't put yourself down for the losses. Don't get too hyped for the wins. Just remember your why and stick it out. And remember to take that feedback that you are getting from yourself to become better day by day. So from your boy Marcy at the Modern Day Trader, I hope you have a profitable week. I hope you have a wonderful week. If you want to test the strategy with me, here is the updated strategy for strategy. Let me actually change this. Strategy number 2. Strategy number 2. So this is the second rendition of this strategy. If you want to back test it, forward test it with me, you can go ahead and let me know your results in the comments below after taking a couple trades. Now remember, you only want to make changes after 20 trades, and you want to keep the same rules. And remember that when you back testing, when you forward testing, that the results that you're getting from the system that you're doing is not a reflection of you as a trader, rather the model, and how do you make that model better. How do you increase that model's efficiency? How do you increase that model's performance? And then how do you work on yourself as a trader that's outside of the charts. You working on your mentality and you working on your psychology is outside the charts. Go to the gym. Note why you do stuff. Don't run away from emotions. Don't go to the gym because you caught an L, because you took 3 trades when your plan said you're supposed to take 1 trade. Don't go to the gym because you fucked up. No. Note why it happened so that you can start to understand why you're doing it. And then remember to always remember why you started this thing. Why did you start trading? That will always bring you back down to doing things that are right and taking it one step at a time. So guys, have a wonderful week, have a profitable week, and without further ado, peace out, man.